start with just a quick question with regards to tomorrow's central bank meeting decision here in India. What's your sense? Will we finally see some,
Sure.
inflation projections being sort of brought down? The process of rates being lowered starting tomorrow, or unlikely?
No, we think that's unlikely. We think the RBI is going to stay on hold tomorrow. We've got a couple of things going. First, we've got some modest tailwinds to growth through the the retail sector spending, a little bit better weather last year, and some pay commission implementation at the state level. And then we've got the GST coming up in a couple of months. So we think all that on balance is going to keep the RBI on hold.
What is your sense, Paul, in future RBI actions? Do you think that it could possibly be a hold now, a more dovish commentary, which could possibly open the door for further rate cuts, say, down the year?
Yeah, I mean, that's what we're going to be watching tomorrow, right? Inflation is running below the RBI's midpoint of 4%. The growth forecast looks good. Real rates are a little bit on the high side, so we'll be looking for signals from the RBI. We've got about a 70% chance of hold tomorrow, with a 30% chance of a rate cut. But I think the language coming out of the RBI is going to be very important to parse tomorrow to try to figure out the future path of policy rates here in India.
You track, just moving on, the apologies for that, Paul, you track the Asia Pacific region as well. Let's just get your thoughts on whether economic momentum in this part of the world is picking up. I mean, in India, for example, if you look at the last data, we've seen a sharp slowdown, right? But what about other countries? Many Asia-specific strategists,
right,
but who look at stock markets, etc., have complained that stock markets in India have been very high, but they've not been sort of supported by underlying earnings growth and the economy, whereas in many other parts of Asia, stock market performance has not been as great, but economic momentum, earnings growth, etc., has been pretty good. Just coming on from the economy point of view.
Yeah, I'll stick to the economy because the link with the stock market isn't always totally clear. We think the region looks a bit better now than it did at the start of the year. The number one change has been the risk scenario. Our number one risk at the beginning of this year was a U.S.-China trade war, given the the inclinations of the new U.S. administration. What happened in the event is China has not been named a currency manipulator, at least for now. So we think that bad scenario is off the table. And then we've seen some good numbers for the most recent quarter. China came in a bit better than expected at 6.9%. Japan had a first good quarter, growing by more than 2% on a kind of momentum basis. So the numbers have come out a little bit better in the first quarter, and the risks look a little bit more positive. So we're shaping up for a little bit better year in Asia Pacific than we thought maybe 3 to 6 months ago.
Okay. How would you compare, say, the GDP growth rates that we've seen out of India for FY17, if you've had a look at them, the revised ones, as compared to what, say, China could possibly deliver, if you had to compare the two GDP growth rates for 2018?
Okay. That's a little bit of apples and oranges. We still think China's going to be at or maybe above their target for this year, which is 6.5%. India's having a little bit of a bump because of the demonetization late last year. So as you know, the latest quarter was 6.1. But because of those tailwinds I mentioned earlier, we still think growth can be 7.5% over the next year or so. So if in terms of the horse race between China and India, we think India is probably going to come out with a bit stronger growth than China over the next couple of years. And China, I think the challenge is to manage growth down to a more sustainable level. In the medium term, China should have a 5 handle on growth, not a 6. And India looks pretty good, supported by structural reforms.
Paul, you're very well aware of the argument that economists and market watchers in India make. which is, they make the case for a ratings upgrade. What are your thoughts in that regard? Do you think there is an argument in a case which should be very much on the table?
I can't comment on the ratings upgrade. I'm not part of the ratings team. Yeah, I'm not part of the ratings team for India. I just provide the macro forecast and the risks. And as I said, we've got India 7.5% over the next couple of years. I really don't have anything to say on the rating. I put my macro forecast in, but a different part of the business handles the ratings on the sovereign side.
Okay, fair enough, Paul. So we're just going to leave you with one quick question with regards to what's happening on the US Fed side. We have the June meeting. And what is your sense in the probability of another rate hike coming in from the US and the trajectory that we could expect through the year and what impact it could have on economies such as India?
Yeah, we still see the Fed moving by 25 basis points later this month. We did have weak payrolls in the last reading, but we're looking at the trend. The trend still looks good. The unemployment rate has come down to 4.3, so the market looks pretty tight. We also have another Fed rate hike penciled in later in the year. U.S. growth should still be around 2.5, so some of the reflation expectations we had earlier, at least in our upside risk scenario, have been taken off the table. So if the U.S. is steady at about 2.5 and no surprises out of the Fed, that should be good for Asia. Asia tends to see a little bit of market turbulence when the Fed surprises, but I think the Fed's trying very hard to be transparent and telegraph their next moves to the market. So we've got a rate hike in June and another one later this year for the Fed. That should be pretty positive for Asia.
All right, Paul, thanks very much. Good speaking with you. Appreciate you joining in with that quick